Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we are going to do what? Revision of our third chapter, that is reconstitution of a partnership firm in case of retirement or death of a partner. Okay, earlier also we discussed the reconstitution of a firm, but in that case there was an admission of a partner, whereas in this particular case there is a retirement, a partner retires or a partner pass away. Okay, so let's take an example. There were three partners X, Y and Z. We know that there could be more than three partners. Okay, this is just for assumption. Let's say three partners were there and they were sharing their profit in the ratio of 2:1:1, and Z retires. He retires. Okay, now if he retires, whatever belongs to Z, or if he passes away, whatever belongs to Z till that date, till the date of retirement or till the date of his passing away, we need to give to Z, because he was also the partner of that firm till that particular date. Okay, so whatever belongs to Z, we need to give him. All these things are mentioned where? In the partnership deed. And if something is not mentioned in partnership deed, what we need to follow? We need to follow the Partnership Act 1932. Okay, now Z retires means earlier the profit that was being shared between the three partners will now be shared between whom? Will now be shared between X and Y. So the profit sharing ratio will change. Okay, so we will determine the new profit sharing ratio. Moreover, the profit which earlier used to belong to Z, now he is no more the partner, so his profit will be shared between X and Y. Okay, let's say same, 2/4 belongs to X, 1/4 used to belongs to Y, and 1/4 used to belongs to Z. Right now this 1/4 of Z is now Z is no more the partner of this particular firm, so this particular profit will be shared between whom? This particular profit will be shared between X and Y, so they will now gain. Okay, so what we need to determine? We need to determine the gaining ratio also. Now how we will determine the gaining ratio? Gaining ratio means what? New profit sharing ratio minus old profit sharing ratio. When we deduct the new profit sharing ratio from the old profit sharing ratio, we will get what? We will get the gaining ratio, how much they are gaining from the retirement of a particular partner. Okay, moreover, how we will determine the new profit sharing ratio? Reverse it. New profit sharing ratio is what? Old profit sharing ratio plus gaining ratio is the new profit sharing ratio. Now how we will determine? Let's say if 2:1:1 was the old profit sharing ratio, and if Z retires, okay, if Z retires and nothing is being mentioned about anything about the gaining ratio, how much they are going to share the future profit, in what proportion they are going to share, nothing is specified. That means the old ratio is only the new profit sharing ratio, that is 2:1, and that will also be their gaining ratio. They are going to share it in the same ratio, that is 2:1. This 1/4 of the profit will be shared between X and Y in the ratio of 2:1. If gaining ratio is being given, likewise if it is being said that this 1/4 of the profit, whatever 1/4 of the profit of Z was, will be shared between X and Y in the ratio of, let's say, 3:2, then that means 3/5 will be given. 3/5 of 1/4 will belongs to X, and 2/5 of 1/4 will belongs to whom? It will belongs to Y, and this 3/5 of 1/4 and 2/5 of 1/4 will be added in their old ratio, and we will get their new profit sharing ratio. Likewise, if old profit sharing ratio is given and new profit sharing ratio is given, then we can easily determine the gaining ratio. New ratio minus old ratio, we will get the gaining ratio. Now why there is a need for determining the gaining ratio? The purpose of gaining ratio is what? For two purposes we need to determine this gaining ratio. The first is to calculate the amount of goodwill, and the second is for the profit and loss suspense account. Now, which goodwill we studied? There is one purchased goodwill, okay, and the other is self generated goodwill. These are two types of goodwill, okay. So this gaining ratio will be required for what? For the self generated goodwill. That means goodwill means what? The reputation or of the name that the firm has earned over the years. So till the time the partner retires, that reputation, the profit they are earning, the firm is earning, belongs. Remember, only when the firm is earning profit, then only the concept of goodwill will come. If the firm is incurring losses, that is, like, the concept of goodwill won't exist, right? So when the firm is earning a profit, they need to determine till the time Z was there, what was the goodwill, what was the, because of that, how much more profit, super profit they were earning, right? So then that particular profit they are going to earn for next 2 or 3 or 4 years, right? So that particular profit belongs to Z also, and if Z retires or if Z passes away, they need to give that profit to Z, his share of profit to Z. So there is a need to determine the premium of goodwill amount. We know the methods, the average method, wherein there is a simple average as well as a weighted average method. Then we know how to calculate the super profit method, and the third one was capitalization method, wherein we capitalize the average profit as well as the super profit and determine the value of goodwill. We have already discussed about it, okay. Now let's say we determine the value of goodwill based on average profit, okay. Average profit, we took the profit of past 3 years, 4 years, whatever it is. We take the profit of past 3 to 4 years, take out the average profit of those 3 to 4 years, and we will get what? We'll get the goodwill amount, the self-generated goodwill amount, okay. That goodwill amount will be given to C, okay. How much? His share. What we determine? We determine the goodwill amount, and we expect that this particular profit we are going to earn for the next 2 or 3 years, okay. Let's say it was 20,000, and we assume that this 20,000 goodwill we are going to earn for the next 3 years. So the total goodwill amount is 60,000, okay. And this 60,000 belongs to X, Y, and Z. So we need to give X his particular share, that is 2/4 equals to 30,000, and this 30,000, this particular profit who are going to earn in future? X and Y. Sorry, Z retires na, so 1/4 15,000. Z retires, so 1/4 belongs to Z, and this 15,000 of the profit they are going to earn, the firm is going to earn, and this 15,000 will be earned by the firm and will be shared between whom? To the existing partners, that is X and Y, in their new profit sharing ratio. But that means the old ratio plus the gaining ratio, okay. So that is why this 15,000 of premium of goodwill will be given by the old existing partners in their gaining ratio, and that is why gaining ratio is required, okay. This is purchased goodwill. Purchased goodwill already exists in the books. It already exists in the books. You need to understand this thing. Whatever exists in the books till the partner retires will be shared among the 3 partners, among the partner who retires also or who pass away also, will be shared among them in their old profit sharing ratio. Whatever appears in the books, okay, before the retirement, whatever appears in the books will be shared among the 3 partners in their old profit sharing ratio. So if goodwill exists in the books, we need to close that goodwill account, and that goodwill will be shared among the 3 partners in their old profit sharing ratio. Similarly, we studied about the revaluation gain or loss. Okay, revaluation gain or loss on what? On assets and liabilities. If there are certain unrecorded assets, certain unrecorded liabilities, or if there is an increase in the value of assets or liabilities, or decrease in the value of assets and liabilities, whatever effect is there, we will either have a revaluation gain on it or revaluation loss on it. We need to prepare the revaluation account, and that particular gain and loss will be shared among the three partners in their old profit sharing ratio. Similarly, we discussed about the accumulated profit and loss. Okay, accumulated profit and loss, any reserves are there, or any previous year loss is there, whatever is there, that also will be shared among the three partners in their old profit sharing ratio. Okay, everything whatever exists in the books will be shared among the three partners in their old profit sharing ratio, and then we will get to know the amount that we need to give to Z, amount to be given to Z. Okay, we will get to know how much amount we need to give to Z. But let's say whatever amount, let's say we are supposed to give 50,000 to Z, but we are giving 75,000. So this 25,000 extra that we are giving, this extra amount that we are giving is what? It is hidden goodwill. Okay, that is hidden goodwill. You need to take this thing into your mind, like anything like amount given is more than the capital amount determined is hidden goodwill. That is hidden goodwill, and that hidden goodwill, who will give? The remaining partners, that is X and Y, in their gaining ratio. Okay, in their gaining ratio. If the amount given to Z is more than the capital amount which they have determined after making all these effects, is considered as a hidden goodwill, which will be given by X and Y in their old profit sharing, in their gaining ratio. Okay, now we determine the value what we need to give to that retiring partner. Okay, so the concept comes disposal of amount due to the retiring partner. How we will dispose that particular amount? Okay, disposal of amount. How we will dispose that amount to the retiring partner? The first situation, pay the amount immediately. Whatever cash or whatever assets or something you need to give to the retiring partner or to the deceased partner. Remember, retiring partner or deceased partner, both the situation are same. The only difference is the amount that we will determine after calculating all these things will be, in the case of a deceased partner, will be given to his or her executor, because the partner has already passed away. So whosoever is the executor of that particular deceased partner, we will give that amount to him or her. Okay, so we will dispose of that amount. How we will dispose of? We will give the cash immediately. Okay, if at all nothing is being mentioned in the partnership deed, what we need to follow? We need to follow the Partnership Act. Okay, now as per the Partnership Act, first situation, give it immediately. If you are not having sufficient balance, or if at all you can't give it right now, you are going to give it in installments, or after a particular year, what you need to give? You need to give interest. You need to consider that capital amount as a loan. Now he is no more the partner. Okay, so his capital account will get closed and the partner's loan account will open, and you need to consider that particular amount as a loan, and you need to give interest at the rate of 6% on that particular loan amount. That rate is specified. Or else what you can give? You can give a share of profit. You can give the share, whatever profit the firm is going to earn in that particular year. You need to share that particular profit with the partner to whom you are not making the immediate payment. how much profit you will share based on the capital employed, total capital employed in the firm, and what is his capital, his or her capital in the firm, which you have not given. You need to take out that ratio and you need to share that profit based on the capital employed by that based on that ratio, right? So this is the situation when nothing has been given. If it is being given in the partnership deed, like what if the partner retires or what if the partner pass away, we will give that particular partner interest on that particular loan amount at the rate of 8%, 10%, 5%, whatever is being mentioned. Maybe they can pay, there's three situations: they pay the cash immediately, okay, or else they will consider it as a loan, okay, and pay the amount in installments. They'll pay it in installments, or partially they will pay in cash, and partially they will consider it as a loan, okay. Whatever the situation is, his capital account will get closed. Cash immediately, partner's capital account will get debited, and cash is going out from the business, so cash account will get credited. Or else if they are giving assets, then assets account will also get credited. If it is considered as a loan, so we need to open that particular partner's loan account. We need to close his capital account. Will determine the whole amount, how much belongs to that particular partner. That capital amount will get closed. We will close it. Partner's capital account debit to partner's loan account, a new account will open, okay. Or else if there is a partial payment in cash and partial payment is considered as a loan which we'll pay in installments, then in that situation partial amount will get closed of that particular partner's capital account to cash account, and partial amount we will consider as a loan and we will open partner's loan account, okay. Now when we consider it as an installment, okay, now could be a situation, there are three situations, and how we are making the payment. The first situation is consider the principal amount and pay it equally in installments, plus you will pay the interest, okay. The principal amount will be divided equally in installments. May it be yearly installments, may it be monthly installments, every month you are paying, may it be quarterly installments, every quarter, like after every 3 months you are paying that particular amount. So whatever it is, you have considered the principal amount as an equal installments you are paying. Over and above on that principal amount, whatever is remaining, you are paying interest on it, okay. That could be the first situation. The second situation is there is something, a predetermined amount which you have already decided that, let's say we are going to give 1 lakh is due, we will give 20,000 every year, and this 20,000 includes interest. This 20,000 includes interest, okay. This is the predetermined amount which includes principal amount as well as the interest amount. So let's say 1 lakh is there, 20,000 you are going to pay for 4 years or for 5 years, then whatever remaining amount is there you will pay in the 6th year, which will include the interest amount also, okay. So there is a predetermined amount which includes interest, and this predetermined amount is being given. The third situation could be wherein you are paying the principal plus interest, principal which carries the interest amount also, it's inclusive of interest, in equal installments. You are paying it in equal installments. Now how to determine it? In first two situations it's very easy, the amount is being given, you just need to calculate the interest amount. But in this situation, how you will determine? So I discussed about the amortization formula, wherein we will determine the annual amount. How? Principal r 1 plus r raised to n divided by 1 plus r raised to n minus 1. This is the formula which you need to understand. Okay, so this formula, I will deconstruct this whole formula later in the next video, but you need to understand that how, like, what is this? This is the principal amount. P is what? P is the principal amount, okay, principal amount. R is what? R is the rate of interest. Now rate of interest, if it is yearly, you need to consider, let's say 10% is the rate of interest, you need to consider 0.1. But let's say that you are making the installments monthly, or you are making the installments, the payment you are making it quarterly, then you need to divide this 10% belongs to the whole year. If it is monthly, you need to divide it by 12. If it is quarterly, you need to divide it by 4. So the rate of interest based, like how you will determine, based on what the installments we are paying. Okay, and N is what? The number of payments, the number of payments that you are making. Number of payments, let's say you are paying monthly, so N will be 12. If you are paying quarterly, so N will be 4. If you are paying yearly, like how you are paying for 4 years, you are paying, so if you are paying quarterly in that particular, for that particular year, 1 year, then it will be 4, right? But if you are paying quarterly for the next 2 years, then 4 into 2, 12 into 2, like that you have to determine. Or if it is yearly, for 4 yearly installments or 5 yearly installments, then N will be 4 or 5, likewise. Okay, so this you need to consider what is being given in the question. Okay, so R, 1 plus R raised to N divided by 1 plus R raised to N minus 1, what you will get? You will get the equal installments that you need to pay every year to the partner. It includes the principal amount as well as the interest amount, and that's how you will dispose of the amount which is due to the retiring or to the deceased partner. Okay, now the next we discussed about the adjustment of capital. Okay, now they decided to adjust the capital. The existing partner decided to adjust their capital. Now there, in this situation also, there are 3 cases. The first case is where the capital is specified. The capital is specified, like how much capital the firm should have. Okay, if the capital is specified, let's say a certain amount is already determined, that the capital of the firm should be 80,000. Okay, now whatever capital is of the existing partner, let's say X and Y, whatever is their capital, if there is a need to bring in more capital, let's say the capital specified is 80,000, and the capital after making all these adjustments comes to 70,000, of which 40,000 is of X and 30,000 is of Y, then there is a shortage of 10,000. This 10,000 will be brought in by the existing partners. Okay, they can be brought in or they will be paid off. Okay, so or else there could be a situation wherein the capital is not specified, the amount is not specified, how much capital it should be. Let's say the same situation, capital is not specified and the total capital of these 2 partners is 70,000. Okay, and their profit sharing ratio is what? New profit sharing ratio 2:1. So this 70,000 will be in what ratio? In the ratio of 2:1. So if any amount which needs to be bring in to the business by the partners, they will bring that cash amount, or else if their capital, existing capital, is more than what it should be, then we need to pay off that capital amount. Or there could be a third situation wherein the retiring partner's amount, retiring partner due amount will be given. We are not making any changes in the capital amount. Let's say it is 60, 40 and 30. So how much it is? 1,30,000. We are not going to make any changes in this 1,30,000, but the amount due to Z, let's say the amount due to Z is 30,000. That due amount will be given by whom? By the existing partners. First they need to determine how much should be their capital as per the new profit sharing ratio, and how much it actually is after making all these adjustments. So if there is a requirement to bring in cash, they will bring in cash. If there is a requirement that they need to pay off, the firm needs to pay off to that particular partners, the firm will pay it off. Whatever is the amount that will be brought into the firm by the partners, and that particular amount will be given to the retiring partner. So this could be the situation wherein the capital is already specified. Capital is specified, determine their new, how much should be their new capital, 80,000 in the ratio of 2:1. How much it is actually is 70,000. How much cash they need to bring into the firm, or how much cash need to be given to the partner. Capital is not specified. Whatever amount is there, you need to consider that particular capital amount, and that particular capital amount will be in their new profit sharing ratio. In all these situations, whatever is the capital amount, the new capital amount should be in the new profit sharing ratio only. Okay, in all the three situations, if the capital is specified, if capital is not specified, or else if the payment is to be given to the retiring partner, then the whole amount should be in their new profit sharing ratio. The existing capital which they already have, after making the adjustments, we will deduct that particular amount from their new capital amount which we determine, and the balance will be something which they need to bring into the firm, or something which need to be given to that particular partner. So this we discussed about the adjustment of capital. And I think the last topic that we need to discuss about, what if the partner retires in the mid of the year, or else the partner passes away. Partner passes away, as we know that we don't know the date on which he will pass away. Okay, so he may pass away in the mid of the year. So what to do in that situation? What to do? We need to share profit. Now profit, when we calculate at the end of the year, okay, when all the transactions has happened, after that we prepare the profit and loss account and balance sheet. But what if the partner retires in the mid of the year, or if the partner passes away in the mid of the year? How much profit to give? Because then it's a cumbersome activity to calculate the profit in the mid of the year. So what they will do, they will consider the past year profit. Past year profit, how much profit was there in the past year, that profit belongs to the whole year. When the partner has retired, or when the partner has passed away, for that particular period we will consider the profit. Likewise, profit is 50,000 for the whole year, and if the partner passes away, let's say in the month of July, 31st of July, or if he retires in that, so this profit is for the whole year. We need to determine what will be the profit for 4 months, April, May, June and July. So 50,000 into 4 by 12. Okay, so 1/3 of that we need to consider of 50,000. Or else the second situation could be, we determine the average profit of the past few years. Okay, we will consider past few years, like past 3 years or 5 years, how much was the profit every year. Okay, so for 1 year how much it will be, we determine the average profit, and that average profit will also be for a 1 year. Okay, so we need to determine the profit of partial month or partial year. Okay, so partial amount we need to consider. Retires or dies on 31st of July, then 1/3 will be considered. Or else there could be a situation based on the sales, we determine the profit amount. Like last year the sale was 5 lakh, and there was a profit of 1 lakh, so 1/5 was the profit. Okay, in the past year, in the last year the profit was 1/5. In this year, let's say the sale is 2 lakh till the time the partner has passed away, so it was 2 lakh, so 1/5 of 2 lakh we need to consider, and that particular amount, okay, that particular amount also is for all the 3 partners. Okay, you consider 1/4, 1/3 of this 1/3 is for all the 3 partners. So how much is that partner's share? Okay, that partner, that is 1/4 of that belongs to that partner. Okay, so 1/4 amount we will determine, we will calculate, and that 1/4 will be given to that partner. Now it's in the mid of the year, there's no profit and loss account which has been prepared. What we need to do, we need to open a temporary account, that is profit and loss suspense account. Okay, we will give that particular profit amount to the retiring partner or to the executor of the deceased partner, and we will open profit and loss suspense account, and then at the end of the year this profit and loss suspense account will get closed, and the existing partners X and Y, okay, their account will get debited in the gaining ratio, so gaining ratio, likewise I said earlier, gaining ratio, two situation we need the gaining ratio when we are determining the self generated goodwill, and second situation when we are opening the profit and loss suspense account, that is a temporary account. We may open, we cannot open, we can combine the entry. If we are opening profit and loss suspense account, what will be the entry? Profit and loss suspense account will get debited to the retiring partners or deceased partners capital account. Okay, profit and loss suspense account to the deceased partners capital account. Okay, to deceased partner capital account we will open, and we will guess this particular amount, and that at the end of the year the second entry will be what? The existing partners capital account debit in their gaining ratio, to profit and loss suspense account, and this suspense account will get closed. Okay, similarly we can combine these two entries. How to combine? Existing partners capital account debit to deceased partners capital account. Gaining ratio, why gaining ratio? Because they are only going to gain that particular profit in the gaining ratio when the partner retires in the mid of the year, or if the partner passes away in the mid of the year. That is why it is required to debit their account in the gaining ratio. At the end of the year they are going to get profit in their new profit sharing ratio. What is new profit sharing ratio? Old ratio as well as gaining ratio. So in the old ratio they were already receiving, now extra they are receiving based on the gaining ratio. So the extra that they are giving to the partner, that to the retired or deceased partners, his share will, their account will get debited in the gaining ratio. Try to understand the logic. Okay, so these are the two situations here. In this situation also, in the future they are going to earn the profit. In the case of self-generated goodwill, in that situation also they are going to earn the profit in future. In what ratio they are going to gain the profit? In their gaining ratio only. Old ratio they were going to receive, but the partner who has sacrificed his share of profit, that profit will be received by the old partners, by the existing partners who are continuing their firm in their gaining ratio. That is why they need to give this premium of goodwill to the retiring or the deceased partners in their gaining ratio. I hope I covered all the points of this particular chapter. I hope you got the concepts clearly of this particular chapter. Only I will say what? Practice, practice and practice. So till then, practice. See you next Wednesday. Thank you very much.